How's it going, everyone? It is Thursday, February 15th, 2024, and this is the video for today. So we are going to go over our market bias here, what we can expect. We are going to go over the short-term market bias, and then we're going to go over some of the things in the current day, as well as some of the picks that we have for today. So taking a look at the market in a longer term, our run still continues, right? We had a big drop from CPI, and it looks like we're posting some nice, steady day of gains. Now, on a fundamental level, we know what to look out for. CPI was hot, and the market still bought it, right? That's a pretty good sign of strength, in my opinion. We know to look out for the next FOMC statement. Earnings are coming in pretty good. No credit crisis. So things are looking pretty good. We are aware that there's a pretty narrow move in the market rally with the semis and the tech stocks, but we just keep our ear to the wall. We don't let that negatively bias us. We focus on the price action instead. Speaking of which, has been very strong. You can see that SPY is moving through this very strong upward bearish channel here. To come to one end, test the bottom over here, test the bottom over here, and we spring back up to test the top end of the channel. So we're still pretty bearish, still pretty bullish in the longer term. Now, short term, I'm also bullish. You can see that we got into the gap yesterday. We are making higher lows and higher highs. However, one thing that Pete said in his bulletin really made me think about different scenarios on a longer term basis. So there was kind of three cases he outlined from most bullish to least bullish. And I'm going to give you his bias, and I'm also going to tell you how that influences my bias. So the most bullish scenario is that we compress here for a week, and then we break that compression out to a new all-time high. Definitely test the top end of the range, if not break through it. If we break through this range, we can expect a buying climax, but this is the most bullish scenario because there's still a lot of buyers to offset sellers, and we don't get any move lower. So on a scale from -3, which is max bearish, to 3, which is max bullish, I would categorize that as a 3. Now, we could also get another pullback down over here to the 490 level, which lasts a week, and then we start to get another move higher that also makes a new all-time high and breaks out of that pullback level. So that magnitude would be pretty brief, 1 to 2 weeks, but also pretty short. Short duration, short magnitude, right? 1 to 2 weeks, and we kind of hold that 490 level. So that would be a 2 bullish, right? Not as bullish as the first scenario, but still pretty bullish. Normal pullback and a bull market. Now, the third scenario would make us a 1 bullish. This would be a deep pullback that lasts 2 to 3 weeks, and we test a VWAP-Q over here at probably around 41, 42 by the time it comes down. Now, that would still put us as bullish because we'd still be in an uptrend, but we have to temper our bullishness because there's a lot of selling in stocks, there's a lot of supply, and there is not a lot of aggression on the part of buyers, right? We would expect them, if they were aggressive, to scoop it up a lot earlier, right? They can't wait to get at this lower price because they don't think there's going to be another great opportunity. So if they let it come down, it means that they're not that aggressive and the trend is fairly weak. So those are our 3 scenarios that we outlined. The other scenario that's unlikely is we get a really strong move up on heavy volume, some nice green candles that has a really strong bullish climax. But if you look at the price action here, we kind of see a nice trickle up higher, drop down, trickle up higher, drop down. So that is what we're seeing. That is what we're expecting. Now, those scenarios really help me in terms of how I foresee the different possibilities in the market, right? That's what scenario planning is. And I was thinking, okay, what are the scenarios that I imagined that the market could do? Now, the first one that came to my mind is, do we make a new high or do we form a double top? Now, here's a great example here, right? We pull back and then we make this new high here, but you see how we're struggling here for 1, 2, 3, 4 days, right? We're unable to advance for a few days. When we start to stall out at the new high, we know that there's a chance that we pull back and test this prior low over here, this breakout level. right? I would expect it to hold because we're still very bullish. And if it breaks, then we know we have to temper our bullishness. So if we see this stall, I know we're in for a bit of a compression. Now, in this case, right, we blew through this level in a single day and we held. That's important because we did not stall at this level. We're able to break through with a lot of gusto, a lot of volume, a lot of momentum, and it created, right, a new trend. So if we break the level in a strong move, we know that there's going to be some follow through. What's also important is if we stall at this level, how hard do we reject from this level, right? We see this weak drift lower and then it's bought up in a single day. That's important, right? We didn't have stacked red candles lower. And you can see there's not a lot of things here. So I'll put this, right, if we talk about Pete's max bullish scenario, this is the max bullish scenario where we compress and then we start to lift off here to the new level. Here is a number 2 scenario where we have a small pullback and then we move higher. What would a number 3 scenario look like? I think something like this, right? This would be a more put us on a 1 bullish scenario where we have this deep retracement, right? Let's call it August 2nd to August 18th, right? So that lasts, 2 to 3 weeks in terms of the market, and then we get the bounce up. Now, obviously, it's a little bit of different conditions here. We know that the bounce down wasn't super strong. It wasn't stacking red candles, but it was pretty decent. We had some compressions. We broke through it on the downside, and then we came up here. And now we're looking for some strong move. When this move starts to stall out, we would predict a double top over here. We start to make some new lows here. That's when we see the double top forming, and I would probably look to get out. So that's what the 1 bullish scenario would look like. So me personally, I'm keeping it pretty short term with the trades, some short term swings here. I have still my long term SPY swing, and that's when I see a double top lower high in the market after a deep retracement, that's when I'm going to get out of the swing. But until I see that, I am going to keep at it. All right, so now that we have our long-term market bias, let's look at what's happening on the short term. So first we had the CPI reaction, which we had a strong sell-off over here and a decent reaction at the end of the day that sparked some interest. Yesterday, we opened up flat. Let me go to the M5. We opened flat. We tested the bid, right? Tested, and then we got some liftoff when sellers try to pound it and couldn't happen. So these moves sort of take time. And we know that this is part of the digestion process. So I was expecting this to last maybe 1, 2, 3, even 4 days, but it didn't. Right? We got the test, and then we started to move higher. Now, because today was a lower volume day, I thought it would mimic what would happen today. So my thing was we'd have an early bid check. We test the high of the day. If we're able to breach it and hold, we could have a nice steady grind higher, just like this, where we just go a little bit higher and higher, and we break through that high of the day. So let's look what happened. So this is a little bit more bullish here. We had 1 bid check early in the day, couldn't get through this prior day high, tested this low, and we snapped back above. Then we had a nice steady move higher to the high of the day, stalled a little bit. We got this red candle to VWAP and then a strong response from VWAP. This is a key sign. We held this level here. We started to move higher and we're starting to digest these gains. Now, the move from here has been pretty not super strong, but you can see that after we filled in the CPI gap, pounded here, bought up, pounded here, bought up, pounded here, bought up. These lows are slightly higher each time. And then once the supply starts to run out, we're going to get this next leg higher. So I believe we're still due for a next leg higher later in the day. There hasn't been a lot of selling pressure, and I don't expect a lot of selling pressure until we see some end-of-day profit taking around 12:30 in the last 30 minutes. So I'm expecting a move higher. I know that SPY resistance, if we go to the D1 chart, the next level would be this high right here, this high at 503. So we have some room until that resistance level. We have about $2 of room. So we have some room to the SPY resistance, and we can favor the long side. So if I was a swing trader, first over here, if I was a swing trader, I would be taking some swing longs here, which I did. I'd also be looking to take some swing longs here because we made a new high and we're moving up higher. So I also like that. So I like that bullishness in the market. I'm not going all at gangbusters, but I'm still swing trading, right? I am doing short-term swings, overnight swings. I like what I'm seeing so far in the market. Steady buying, right? We had a pop, had to adjust the gains a little bit, but we held this breakout over here, and we're starting to inch a little bit higher. All right, so now that we have this, let's look at the positions from last video. So first off, we are in MU. Now, the market has been strong. MU has actually been doing really well. This is an excellent stock pick, but again, I warned about shorts. If you're going to swing overnight, you really got to have a lot of market conviction that we're going to go down, because the risk is you're going to get trapped in a short like this where technically it's okay, but you're just waiting for that time where it's going to break out, right? How much do you want to bet against the market right now? So I guess I'm not actually having MU, but I would still hypothetically hold it until it has proven me wrong. One thing you'll notice here too is that we are making slightly higher lows, right? Here's a low, here's a low, here's a low. We're able to get here. There's still some supply that's offsetting what we're seeing here. So we're in this compression a little bit. I think taking the small loss is justifiable. It's hard to say, but that's why I'm not liking to swing trade any shorts over here. But I would wait for the technical confirmation. All right, now we have Ally. Ally tested this bit again, and we're moving up higher. You can see it had a big move, and it's not really rallying with the market. It's kind of working off some supply. But in a strong market tailwind, this stock is getting a little bit of relative strength now. It's sort of flattened out over here. So I would look to take profits on this trend line. If we can get a trend line break as well, that would be excellent. But I'd be looking to scratch at this level here. That's where my target would be. So if you can get it at 37.50, then that's a nice recovery for this stock. Okay, next one here, Confluent, CFLT. So a lot of gains the last 2 days. Has to digest some of the gains, right? We moved up higher. There's still some profit taking at this level. There might be some minor horizontal resistance over here. If you look at this chart on Confluence right over here, there's maybe some horizontal resistance, but I'm not really reading too much into that, to be honest. I think there's just some profit taking and some supply we have to work off. If we hold the candle, we're making some higher highs, higher lows. We should work off the supply and go higher. I mean, if you look at the move that it's made in the past 2 days, it has to work off some of these gains, right? We have this move down, and the next leg up, move down, next leg up, chopping over here, and then we're getting that next leg up. That is what I am feeling for Confluence. So I am in, I really flipped around my M5 and my D1 charts. So I took Confluence. I am in these calls right here. Yep, I am in the March 15th $30 calls at 450. So I'm targeting about a $1 to $2 move, so somewhere around 35.50. If I get that, then I will hit my profit target in the stock. So Confluence is still nice. APO still steadily grinding higher. Early in the day, you can see it has to work off still some supply here. It made some new highs. A lower high here has been a little bit choppy today. There's some profit taking after a really big run. Again, look at this massive run here, compression, massive run, tiny pullback. So not rallying as much with the market, but I view that a little bit more as profit taking, and I still love the stock on a D1 level. You can see how it's just been steadily grinding up, and I'm really fine with holding the stock over there. Okay, Crowd. A little bit of a problem child here. So Crowd came up, tested this high right here, 36. It actually broke through it a little bit, 37 here. We had a high of 38. So we tested here, rejected off the high pretty strongly. And now it's kind of holding these gains here. So obviously nothing you want to go long today, but I still view that as fine. We know that on the moves up, Crowd does have a little bit of profit taking here. So it's important for us to see that, is this a level that we reject, or is this a level that we pause and then we move again higher? So Crowd is still fine in my book. Today was also ripe for some day tradings and some swing trading. So swing traders, I would be taking some swing longs over here. I'd still keep it shorter term. That's how I feel personally. You know, a few days, overnight, 1, 2, 3, 4 days, something like that. We don't have a lot of news next week as well, but there is NVIDIA earnings, so you have to keep that in mind if you are in any semis stocks over here. For day traders, there was a couple of entry points. The first one that I liked was over here. We had this LRSI cross, this bear cycle, which could not make a new low of the day. And we had a LRSI 1P cross, sorry that I said that, and a move above VWAP. We held that a little bit. We were able to have some gains higher. So if you're in a relatively strong stock, you could take something at 11.30 and 11.45 and day trade those gains there. And when we start to stall at the high of the day, I would start to take some profits here. Now, I took two day trade longs over here, and I'm going to explain my thought process for each of them. So the first one is Crocs, which was a post-earnings move. So this is what I saw in Crocs. You can see here, massive gap up, had to digest the gains, right? Rubbed against here, started making some higher lows, finding a lot of support at VWAP, and then we broke through this high of the day. And I actually took it over here at 118.38, and I was looking for $1 here, right? I liked what the market did at 105. I liked this move up. I thought it was very, very strong. And I felt that Crocs would hold the gains in the event I was wrong on the market. So I was looking to take $1 on Crocs, and I got my fill over here. You can see that Crocs has continued higher, pull back to the 8 EMA, and it's just been steadily grinding up over and over again, now around 122. So could have held it longer, sure, but you know, that was my trade thesis right there. I didn't know that you know, I didn't have the foresight to see that it would still go up, but I was bullish on the market, I was bullish on the stock, and I was right, and it took a quick $1. So still some room for improvement on a stock like this, on a trade like this, but I'm glad I stuck with my thesis. Now FANG is also a really, really nice one as well. So FANG, you can see on the D1 chart, there is some news where it's merging with another energy company. So a lot of strong price action, pretty overextended. Well, not super extended, but a little bit overextended in my opinion. But you can see how this is a materially changing news that has dramatically changed the price action of the stock, right, of how it's acting. So if you look at this chart here, really steady buying and heavy volume. Once it broke through here, which was this this line right here, once it broke through that, we started to get higher and higher and higher, and some more volume started to come in. Now, I took FANG right around here, 120, because I knew it was a steady grinder, or sorry, 115, because I got the strength in after the pullback. I knew it would pull back and then make another leg higher, and when it made another leg higher, I took profits here, a little bit less than $1 on a stock like this. So FANG was also a nice win, and I was really trying to get these nice steady grinders over here, right, where it's just moving up and up, doesn't get too far away from its 8 EMA, so I can buy the strength after the 8 EMA and get some really nice continuation on that. So those are two examples of some day trades I took right around here. Even though the market was flat, I know that FANG had shown its strength. It was moving up when the market was completely flat over here, digested and compressed the gains of the high of the day, and started to move up again after a pullback. So this is, to me, the ideal M5 chart. You could probably stay in this the whole day, in my opinion, now that the market's taking off and this stock is pretty strong. So I would stay in it probably the whole day until the market shows, until the stock shows sign of faltering. So still something that I have to work on my personal, you know, market bias, but something that I I'm looking at for this stock as well. Now, I have to give you guys a pick, and this is my pick of the day. JPM, and this is one that I'm going to take here. You can see that, first of all, beautiful, steady price action. Some post-earnings weakness filled in the gap, got a big pop-up, and then we are just compressing for a while, digesting some of the gains, and we get this lift off today. Financials are very strong. I would have to see if there's any sort of news on JPM, but just in the price action, stacked red candles, broke through this prior level, was working off the supply, broke through it again, worked off the supply. So we broke through this high of the day right here, and then we started to get nice, steady buying on JPM. So we see there's a really nice pullback here. SPY's inching up, making a new high. I don't think it's going to get too ahead of itself. It's just going to test the bid and slowly grind up higher. I like this stock. I believe that this will continue. I believe we will hold this breakout level over here. That is crucial. I'd use this as my stop. So whatever this high is, 176.76. So have about $3 of room there. I would take JPM after this pullback. You can wait for an LRSI pullback as well. I think those work pretty well. So that's what I have here. So either here, or you can wait for a deeper pullback if you want. But it's a pretty steady grinder. It's not insanely choppy right now. So that is my pick of the day. I think it's great. I mean, this is the chart. Beautiful D1 chart. Beautiful M5 chart. Heavy volume, relative strength, high R volume. We're right on the market. So this is the pick for today. And we are going to take a look at how JPM did in the next video. So day traders favor the long side. Wait for your entry points here. Wait for this early bid check and move up higher. We can expect for next week as well that there's a holiday, so there's gonna be some light trading on Friday, some light trading on Tuesday, no trading on Monday. So it really eats away a lot of the days that we're seeing. The other thing is that after NVIDIA earnings, there's not that much else for the month. So in my opinion, if there's no other news, then I believe that we might see some profit taking supply, but it seems like we're gonna get another challenge higher is what we're looking like right here. So that is what I'm trading. I'm trading what's in front of me. JPM is my pick again for the day. I hope you guys just found this video helpful, and we are going to review this pick in the next video.